Let's welcome in Gautam Shah, founder of Goldilocks Global Research. He's with us. Gautam, good to have you with us here. Thank you very much for your time. We had a decent move, Gautam, 24,300 to about 150 in 6-7 odd trading sessions. And do you think we go back to the lows that we saw, with the recent lows basically, which was the 8th of August, 24,330, those kind of view not very far away, 200 points away. You think that's the first stop?
Good morning, Prashant. I think you need to widen the lens a little bit, because if you look at the last 1 year, the Nifty has generated zero return. I think last August we were around 25,000. This August we are at 25,000. And in this period, the market has handled a lot of adversities. It started with the FII selling, then issues around economy and consumption, then geopolitics, and now the Trump tariff. So actually, the market has handled a lot of adversities. And in this period, the one thing that has really protected us is really domestic liquidity and the fact that 27,000 crores is coming into the system every single month. Had the support of liquidity not been there, our markets would have been 15% lower than where we are right now. So I think this battle has played out over the last 1 year. I think it's really all about discounting. And I think with what's happened with the Trump tariff over the last few days, I think most of the discounting on the negative side is done with. I'm still not very negative about the markets from a medium-term, long-term perspective. I think the charts are still in good shape. But the sad part is India has become the poster boy underperformer after a long period of time. Because if you look at the world right now, US markets are at lifetime highs, European markets are doing well, China is at a 10-year high, markets like Singapore are at a 10-year high. And in this environment, you have India underperforming. So I think eventually India will have to join the party. So if you're somebody looking at markets over the next 6 to 12 months, I think this is an opportunity to buy. In terms of levels, 24,200 to 24,400, I think is a very important support area. Until the Nifty is above the same, I'm tempted to believe that this discounting of all the negative items will take place and the market will gradually move up. Because I don't think it can really get too much worse from here. And the GST push, I think, in some sense is a game changer, which I think the market realizes. So I think once we are trading above levels of 25,000, the ball will set rolling for the next phase on the upside.
Gautam, just a view on the market itself. You said that 24,200 is an important support, 24,200, 250. But thereafter, you also qualified it by saying that the market will only gradually move up. So you're obviously not expecting it to do a bazooka up move back to an all-time high. So it will just walk into the party as against stride into the party or dance into the party is what your belief is, right?
Well, over the last 5 years, we've seen enough bazooka up moves. And I think people have got spoiled in believing that every single time the market will run up as if there is no tomorrow. But let's not forget, we are still one of the most expensive markets in the world. And there are concerns around the economy, which is the reason why the Nifty itself has not been able to build up on the gains. But I think from a near-term perspective, over the next 2 to 6 weeks, I think the market will aimlessly stay in a range. It will be volatile. It will give you periods of greed. It will give you periods of fear. I don't think it will break out or break down. So my working range is 24,200 to 25,000. In this period, the Nifty is going to just stay stuck. But eventually, I think there are higher chances of a breakout on the upside. And as we've been maintaining all along, I think this is a stock-specific market. Forget the Nifty, forget the index. Look at pockets in the mid caps and small caps. That's where the big opportunity is. And that's where outperformance is going to be over the next 6 to 12 months.
Absolutely. You've been saying that while you've retained a positive stance in the market, Gautam. You've always been maintaining, I think right from April onwards, this is going to be a more stock-specific market. Before we talk about the sectors and the leadership, because there's absolutely no leadership in the Indian market, that's the problem, right? I mean, now everybody's pinning their hopes on consumer and FMCG. But before we talk about sectors, just to complete that correlation analysis, I mean, if there's one thing that this year has taught us is that correlation of the Indian market with the US market, that's been broken. But is that just a phase, or is there something longer term structurally that you see changing when you look at bigger charts like, whether it's the dollar, whether you're looking at the 10-year bond yield, US bond yield, or even US equities themselves? Is there a bigger message out there than just a small period of underperformance here in India?
Well, I hope there is no bigger message here, because I think over the last 20 years, India and US have pretty much moved hand in hand. We've seen this all along. You can put both charts together and you will see tops there lead to tops here, bottom there lead to bottoms here. It's just in the last 3.5 months that India has gone the other way, but usually they meet, and I think they will meet on the way up. But the bigger problem which I have right now is I think China is probably the next big opportunity with what it's done in the last 2 months. And there is a very clear case of possibly India underperformance and China outperformance over a period of time. That doesn't mean that India will not deliver returns. It's just that it might not deliver relative returns in comparison to China. So India-China, I think equation has changed quite a bit, and I think that's a new mega trend over the next couple of years. But US and India, I think, will move hand in hand, because you can't have a global equity market bull run, which is what we are seeing right now, and India not participating. We are discounting the negatives. Hopefully that will be done with over the next couple of weeks, and then we will be back joining the rest of the world.
All right, we take that point. Just hold on, Gautam, as we ask you about your market sectoral views right now, because just as we speak, there's been a sharp downtick in the frontline indices. The Nifty is now just around the 24,540 mark. At one point was threatening to break that 24,500 mark as well. And it's across the board selling. So you have three large weights on the index. We have the Nifty Bank, which is down by about 0.8% after underperforming for a while on that one. Then you have Reliance, which is not doing too well. And now today, we're seeing a fresh bout of selling in the IT pack as well. So the IT index is down about 1.5%. Remember, on Monday's trading session, the IT index actually supported the frontline index, and as a result of which the Nifty was up around 100 points. But the last two trading sessions, the IT pack also has begun to see some sell-off. So the Nifty now, for all practical purposes, is also below the level from which it started to rally after the Independence Day speech on the Prime Minister. So the Nifty before the Independence Day speech of the Prime Minister was closer to 24,560, 24,600 thereabouts. Then the speech came in. The street liked what was said, especially on account of consumption uptick. In the next few days, we saw a rally all the way up to 25,134 thereabouts. And now we're back to levels below that. So we've erased all those gains.
No, absolutely. And it's important you point that out, Mangalam, because if we talk about the entire compression the market has seen in the last 3.5 odd months, now we're barely 200 points away from the lowest point of this consolidation patch. The low the market hit, just to reiterate the levels, was 24,337. And this was earlier in August, to be specific. The low that we hit was the 8th of August, 24,337. And we are exactly 200 points away from challenging that low. So it is tough. It's a tough morning of trade. And it's been a tough reaction to those 50% tariffs as well. Just to reiterate the range that you put out for the Nifty, Gautam, you said that your working range in the near term is 24,200 to 25,000. Is that right?
Yes, that's the band in which I think the Nifty will just try to find its footing. And 24,200, I think, is a very important support number for me as a technician who looks at the weekly and the monthly charts. But I think the bigger point is, don't look at this market day to day or the next 2 to 3 weeks. I think it's very messy. It's very noisy. If you take a more 6-month to 12-month perspective, I think there are some amazing opportunities, with a lot of margin of safety and risk reward. So, I mean, if your lens is 6 to 12 months, the market is a buy at today's prices.
All right. And, while this range continues, what are your calls on the sectors? Which of the sectors appears a little more oversold and perhaps as a result of which a better investing opportunity? And which are the sectors where you believe that, there is not a lot of upside left?
Well, I think the problem has been leadership, as you all alluded to. I think because IT has been in a very difficult space, Reliance has gone nowhere, and the Bank Nifty has seen quite a big hit in the last 2 weeks. When the three big pockets of the market don't do well, it's not possible for the Nifty to build up on the gains. But I think eventually Bank Nifty and the financial services sector will have to carry the market, because valuations are comfortable, flows are still coming in, and the top banks are still very well placed, and they really don't have too much impact of what's happening in terms of foreign policy. So given all of that, I think Bank Nifty somewhere between 53,500 to 54,000, I think, is an opportunity. And we do like the entire NBFC space, and I think they can definitely be bought into right now. The two other sectors that we like are auto and metals. Auto clearly spurred by the recent GST news flow. It's visible on the charts, and I think a 15% move on the index is quite likely, followed by metals, which hasn't done so badly in the last 2.5 months, despite all the negative talk around it fundamentally. I think metals is also a big opportunity. But as I mentioned earlier, it's a stock pickers market. So you go mid caps, small caps, there are various pockets there, power, infrastructure, fertilizer, where I think the opportunities are immense.
Specifically, what are some of these consumer company charts telling you, Gautam? Let's say two-wheelers or even four-wheelers. Suddenly there's some sign of life, even in a stock like Maruti. And then FMCG. Now, FMCG, not sure if it's a hope trade or if the charts are indicating that there is some bottom formation, whether they have the energy building up for a more substantial up move.
Well, auto, we are quite convinced that this is a genuine move, and I think it's going to lead to a lot more upside. I think the top 4 or 5 names, we like all of them. In fact, we covered officially a couple of them at Goldilocks recently, and I think the index is likely to appreciate 15%. And it's very clear, I think the GST push has triggered that breakout on the chart, and it is here to stay. So we are seeing relative strength. But FMCG, I think, is still a problem because it's the mirror of the economy, and the FMCG index has been underperforming since October last year. So it's been 10 months of underperformance. And the problem is they're all still richly valued because we sold them as the India story. All kinds of valuations were justified last year, and now people are facing the heat because they are underperforming. I still don't see an opportunity there. I would stay away. I'd rather go with services. That's probably the reason in Indian hotels and Eternal is doing where it is. Not a recommendation, just an observation. Services consumption is probably for me a bigger opportunity than product consumption.
That's an interesting one, services consumption versus product consumption. We've seen that in a lot of the hospitality names and even Interglobe. Speaking of Interglobe, by the way, we understand that the deal size has been curtailed. So the earlier large trade that took place, which we said was 2.2% and not the entire size of the purported 3.1%, was because the deal size itself has been curtailed. We'll obviously get Vivek to talk a little more about that, the reasons, etc. for it. The stock, however, not particularly happy with that curtailment of deal size, and it's down about 4.5%, so below that 5,800 mark for that stock as well. Gautam, you said there are a lot of opportunities in stocks, so let's get very direct. Specifically, what are the 3 stocks that you like?
Well, I don't want to speak about specific stocks, but there are certain themes which we like over the next couple of years, and I think today is a great opportunity to buy into them. Possibly power, if you have to play the India story. Power, infrastructure, and clean energy, and hotels and travel. These are 4 themes that we really like. And the moment the market stabilizes, I feel that these 4 themes can deliver supernormal returns. Power is a no-brainer. Infrastructure is a no-brainer. Clean energy, I think we've done a lot of work around it. And I was at a couple of events, and I think the thesis is very clear that the world and India is moving towards clean energy. And a lot of stocks are being ignored right now. But again, if your lens is 2.5 years, that's an opportunity. And travel and hotels, I mean, the winner takes it all. Look at what Indigo is where it is. Look at where Indian Hotels is where it is. So I think this is again a mega theme which I think will play out. Valuations are comfortable, and I think these companies enjoy great market share, and it's only going to get better and better for them over the next few years.
By the way, there's a lot of downside pressure on stocks now on the large cap screen and on the mid cap screen. So today's fall hasn't spared either large, mid, small, nothing. It's all down, and financials are taking the market lower very, very clearly. So if you look at the Nifty and this 200-point drop, then a lot of it is finance. Shriram Finance, HDFC Bank, Jio, and so on and so forth. But the problem is there is no counterweight either. Stocks like Reliance, Bharti, everything on the downside.
This is banks and financials. That's what I was talking about. And by the way, it's not now. It's down 1%, but it's hugely underperformed.
Yeah.
So while the Nifty is still not at the lows. At Nifty, by the way, had a good retracement. 61.8% of the entire fall. The Nifty retraced. The Nifty Bank did not even retrace 38%. So there was no real momentum, and that's the economy-facing part of the market, which is relatively speaking underperformed in a big way. I don't know if Gautam has a view on this. Gautam, Nifty Bank.
Yeah, as I said, I mean, if you look at it over the last couple of months, it's been an underperformer, no doubt about it. But can it really collapse from here? Can it get into a sort of a bear market? I don't think so. I think till 2 weeks back, you had SDFC Bank at lifetime highs, SBI doing well, Bajaj Finance holding out really well. And these are companies with solid earnings and nothing to do with what's happening with the US. So I wouldn't be too negative. I know that it's high beta and therefore it's correcting. But as I said earlier, somewhere around 53,500 is where your most important support is, and that's where the 200 exponential moving average is. So risk reward from a more 3 to 6 month perspective for financial services right now is in favor.
Okay, all right, we'll take that. So keep the longer term lens on, not the near term noise. That's the advice from Gautam, and in all probability you'll end up making money. And this is the time, these are the times when the market really tests our patience and our nerves. So important advice. We'll keep it in mind, Gautam. Thank you very much for joining in.